I'm Mi Yoon from the Department of American Studies at Myeongju University. June 4th, let's begin today's Big Two's news. Let's take a look at the trends of American stock investors and analyze what is happening in the United States market. The United States stock market has been trending upward for several consecutive days. The artificial intelligence stocks we favor are performing exceptionally well. So the passionate fans who always watch this broadcast with us are also showing very good reactions and are excited. Recently, I have been running the Mizon All-in-One member shop, and I'm introducing a new content there. This is the Mizon podcast. I have already mentioned the Mizon podcast on this broadcast before, but I wanted to bring it up again and share it with more people. If you watch this broadcast and use the code, the podcast directory will be gradually expanded. We will continue to leave positive messages like this, and the podcast where you write articles is also a creative space for analysts. It felt unfamiliar at first, but I got used to it as I kept listening. Thank you for your feedback. Personally, I think artificial intelligence can be actively used not only in stock investment, but also in content creation that many people are interested in these days. Especially when it comes to stock investment, I believe that using artificial intelligence actively will become increasingly important. The reason is, in order to succeed in stock investment, not only is my own perspective important, but it's also crucial to understand how different people think and how the majority thinks. That's why I keep emphasizing this point. Artificial intelligence is great at understanding the thoughts of the majority, and that's why I personally value this kind of thinking. What this means is, artificial intelligence ultimately delivers the most important information to us by analyzing a huge amount of data. But in the world, there is something called the truth that we believe in, and then there are also the opinions of the majority, which are not necessarily the truth. The important thing here is that in the space between truth and falsehood, what ends up being the majority is often just what most people think. And when artificial intelligence collects and learns from these majority opinions, the result is that the information artificial intelligence gives us is not always the truth. Artificial intelligence cannot distinguish between truth and falsehood. In the end, the most important thing for artificial intelligence is which information is the most prevalent among the various pieces of information in the world. I wanted to let you know this as a takeaway. So, if we invest in the self-driving business of Tesla based on a promise, and if Tesla's self-driving is not very likely to succeed right now, that's not the important thing. The important thing is whether many people believe that Tesla's self-driving will succeed. That is my opinion. So, if we actively use artificial intelligence, that's what will happen. We may not be able to fully grasp the reality of this world, but I think that by understanding the opinions of the majority, which are the most important, we can get a lot of useful information. From that perspective, I will continue trying to show you various groups actively evolving in the future. Today is June 4th, and we'll start right away with the United States stock market news. As always, I'll organize the United States stock market situation for you. Let's take a look at the S&P 500 chart first. As you can see, the number of rising stocks is similar to the number of falling stocks. By sector, you can see that there are far more sectors that went up. In particular, the stocks that we favor performed very well. Mi Yoon's reliable commentary and Nvidia led the market. Also, most semiconductor stocks showed a clear upward trend, guiding the market's rise. That's how you can see it. And there are some parts that we need to pay attention to. Yesterday, consumer stocks performed very well. If you look at the performance by sector in the United States, most sectors showed a plus. However, among them, the upward trend was even stronger in microcaps, small caps, and consumer stocks. As you can see, consumer stocks performed particularly well. It means that there was positive news about the United States economy, so we can interpret it as a sign of optimism. In reality, recently there was another piece of positive news that reflects optimism about the United States economy. There was news that the number of jobs in the United States in April exceeded expectations, which is a positive sign. You can see it highlighted in the highlighter. In April, United States job openings surpassed expectations and employment grew more active. This indicates that the labor market remains robust despite reduced economic uncertainty. Recently, the United States Department of Labor announced the number of job openings for April, which was 9.39 million. This is an increase from the revised figure of 9.2 million in March. And this time, the median estimate of economists surveyed by Economist was 7.1 million. Thus, this result is much more positive and surprising compared to expectations and even the revised figure from last March. So, if the economy continues to recover like this, it means that consumers will have more opportunities to spend. And as you can see, that's what will happen. Now, even though the market needs to maintain this upward trend today as well, the articles that are currently being published are not that positive. If you look at the mixed news that was released a few hours ago, President Trump has been characterized as someone difficult to convince, despite the intense United States-China confrontation. This is the headline. Donald Trump said that Xi Jinping, the Chinese president, is an extremely difficult person to reach an agreement with. The White House said that although there have been some misunderstandings, this time the two leaders could have a normal conversation. President Trump said he personally likes Chinese leader Xi Jinping and considers him a friend, which will continue. However, he described Xi as a very tough and extremely difficult person to reach an agreement with. But from what I see, he is extremely focused and determined. When you look at President Trump's previous posts, there were a lot of messages that were far from polite. This time he said, "I originally liked Xi Jinping and will continue to like him in the future." So, in other words, I'm not saying this as an official statement, but I'm judging this personally. No matter where you go, if you look at the market from a positive perspective, various indicators look good. The market's closing was 69.84. Among the 500 major industries in the market, about 70% of the stocks are showing good momentum in the short term. And if you look at the sectors with good long-term prospects, about 50% are included. The supply of public offering shares has increased. The date is June 17th. We can directly confirm that the market is maintaining a normal level of volatility without any sudden changes. The fear index has also slightly increased to 56. Now it is entering the fear stage again. Joy Stang's market score is also at 75 and there haven't been many changes. This is the chart of the United States dollar index. First, let's look at the most recent trend. As a result, the Crowd Technology barely managed to achieve an additional 14.8% return. At one point, it had exceeded 25%, but as the short-term buying momentum slowed down, we had to settle for a 14.8% gain. Now moving on to the second one, Vista climbed by 5.09%. The reason why Vista's stock price saw such a big increase is because of one thing. There was an article saying that Meta is preparing to launch artificial intelligence-powered electric power generators. Now, if we look at this is news that in the electricity trading market for the second half of May, the contract for power generation using Meta's platform and energy storage showed a price increase of more than 12%. So, this is how the contract between the megatech industry and Constellation Energy continues to be announced one after another. In this way, the share of electricity supplied by Constellation Energy is rapidly increasing, as you can see. And if you look at NextEra, it also performed well with a plus 4.87. Other top performers, Strategy plus 4.07, Celestica plus 3.96 ProShares, Ultra Bitcoin Exchange, Traded Fund plus 3.58, Broadcom plus 3.27, NVIDIA plus 2.80, Talon Energy plus 2.78, Advanced Micro Devices plus 2.34, Taiwan Semiconductor Manufacturing Company plus 1.42, Palantir plus 0.86, and Tesla plus 0.46. Bitcoin had a slight gain of 0.02%, and with that, there have been 10,547 zero trades. Yesterday, most of the stocks fell slightly. Amazon was down 0.45%, Trade Desk was down 0.49%, Meta was down 0.60%, and Uber dropped by 1.33%. At the end, Alphabet fell by 1.69%, making it the worst performer. Today's first news on the broadcast is about the original source of the article, which is news related to tapping and Nvidia in the United States. Yesterday, there was a small event related to Nvidia. Nvidia has once again surpassed the market capitalization of Apple. So, with Nvidia drawing so much attention, would it be good to buy it now? I'll share several related articles here so you can refer to them. Nvidia's stock price doubled in just 2 months, reaching a market cap of $1 trillion, and investors are now concerned about whether this growth can continue or if a correction is coming. These are the expectations in the market right now. Last week's actual announcement was especially focused on the United States, as the mid to long-term semiconductor export regulations could limit Nvidia's strong sales growth and artificial intelligence investment momentum. Also, there are concerns among major investors about the possibility of oversupply due to the recent expansion of foundry supply. Therefore, last week's earnings results were announced, and the uncertainty was completely resolved. This is because both issues were confirmed. First of all, it's the first point. During the United States-China trade dispute, concerns arose that if China's exports slowed, it would impact Nvidia's growth, leading to significant uncertainty. But that turned out to be unfounded. Despite the huge losses in China, Nvidia's growth has actually accelerated. And the second point is, there was a supply issue with Blackwell, demand was a problem in China, and supply was a problem with Blackwell. The supply chain has actually returned to normal, so going forward, mass production is possible. With this positive news, Nvidia has continued its upward trend so far. So now, the questions that were raised about Nvidia have been resolved positively. It's a meaningful move by Gilbert Investments' Chief Portfolio Manager, Thomas Martin. So when you need to buy Nvidia stock again, strategically, this is the kind of recommendation being made. Nvidia's stock has skyrocketed over the past 2.5 years due to high demand for artificial intelligence chips. However, worries are emerging about a potential correction in late 2025 as big tech companies may cut investments and key customer growth could decelerate. However, recently, we are seeing an incredible upward trend again. Nvidia's stock price has recently surged by another 28%, rebounding more than 50% since its low point in April. The company's market cap has now exceeded $3.4 trillion. As a result, Nvidia has overtaken Microsoft and become the most valuable company in the world. Nevertheless, Nvidia's stock price is still about 7.7% lower than its all-time high from last month. Even after this rapid rise, Nvidia's forward 12-month expected earnings ratio, what we call the forward price-to-earnings ratio in English, remains high. We must determine if the market cap can increase significantly, expecting this industry to emerge within a year and calculate accordingly. It's about 29 times. Over the past decade, the average has been around 34 times. Compared to historical levels, the current forward PE ratio remains relatively low. Now let's compare. Nasdaq 100's earnings growth this year is expected to be lower than that of the S&P, but it's still trading at about 26 times earnings, which is not considered cheap. The Nasdaq, which includes 100 major companies, is trading at 26 times earnings. In the case of Nvidia, it has the best sales growth in the current market. Even so, it's still not receiving a premium at 29 times earnings, and that's how the current explanation goes. Now, if you look at Nvidia's price as earnings to growth is, to explain it again, PE ratio divided by G, which is growth rate. If you do that, it doesn't even reach 0.9. Apple, Amazon, Google, and also Tesla, Meta, even among the Magnificent Seven, it's the lowest. Compared to recent growth, Nvidia stock has the worst performance. That's how bad it is. Nvidia, because it manufactures its chips overseas, can receive the full benefits of the United States tax incentives. Nvidia could be affected by tariffs due to the slow semiconductor industry in China, which makes up 13% of its sales. However, recently there was a purchase agreement with the Chinese government. Therefore, it is possible to offset some of the losses in China. There's great potential for high sales volume in the Middle East. And as for Nvidia's product lineup, when we exclude the competitors, their performance is just too outstanding, so they are receiving such high evaluations. Several times, companies like Microsoft, Meta, Alphabet, and Amazon have been mentioned. These companies are the main customers that account for more than 40% of Nvidia's sales. But if we follow Bloomberg's forecast for analyst expectations, what will be the free cash flow and capex of these four companies in 2026? It's expected to reach about $330 billion this year, which is more than a 6% increase compared to last year. Therefore, the capital expenditures of these major customers are expected to continue increasing, which is a positive outlook. Now, and one more thing. Amazon's cloud service operator has once again confirmed its plan to aggressively expand its data centers in the financial district. Even major high-value companies say they will continue to hold back on investments, and this signal isn't going away. The amount they are holding back is gradually increasing in terms of flexibility. Artificial intelligence spending hasn't expanded much yet, and as self-spending continues to increase, the possibility of a cycle where only a few companies like Nvidia see a big expansion is low. During Vijay Tuli's question, you mentioned the importance of the supply chain. According to the supply chain, Nvidia is still fairly valued. After the earnings surprise, the forward price-to-earnings ratio can go from the low 30s to the early 40s. This is what we are seeing now. Let me say it again, but the stock price is actually undervalued. So, when we say that the multiple can go from the high 30s to the early 40s, we mean that the multiple can increase by about 30% to 40%. So, if that happens, assuming Nvidia's earnings, and let's say the earnings don't go up much from here, but if the multiple goes up by 30% or 40%, then Nvidia's stock price could see a significant upward trend. This is a mathematical calculation you can expect. Analysts generally have a positive outlook on Nvidia. Out of 78, analysts only 8 have a hold opinion, and most analysts are giving buy recommendations. So currently, the majority of analysts are recommending to buy. According to this, the average target price is about $1,700, which is about 24% higher than the closing price on Monday. The most critical part is approaching. Compared to the popularity it enjoyed among experts on Wall Street, Nvidia still has a relatively low holding ratio among institutional investors compared to other big tech companies. According to data from Bank of America, only about 26% of Nvidia's shares are held by institutions, while 74% are held by other fields. Amazon, Apple, and Microsoft have an average 91% institutional holding ratio. So, while other megatech companies have an average of 91% of their shares held by funds, only 74% of Nvidia's shares are held by funds. In the future, a significant number of funds can still buy Nvidia, which is a positive interpretation. So, what are the reasons for the relatively low holding ratio and the higher amount of computing infrastructure? It is expected that Nvidia's stock price will continue to rise even in 2026. According to Center for Financial Research and Analysis Research's senior stock analyst, Gino, this is coming out. Many investors were too optimistic about the market before, and now they are in a situation where they can't help but buy again. Now, there are a lot of investors who want to buy Nvidia stock but are anxious, and that's why the rally is happening like this. If you look at Hyundai Nvidia's momentum, it's strong. Among the 26 indicators, not a single one is showing a sell signal. There are 10 neutral signals and 16 are showing strong buy signals. And if you analyze the chart in detail, Nvidia's current price is $141, with the first resistance level at $145. You have to break through this section for sure, but if you do, the potential for further upward momentum is high. That's how you should look at it. From late November to early January, the stock twice tried to surpass the $140, $150 range. And then, because it repeatedly moved between $130 and the lower range, the key point is whether it can break through the $140 to $150 range quickly. Now, the 20-day moving average is currently positioned around the $130 range. But if it bounces off $145 and falls again, it could rebound from the $130 range. The reason is that it could become a strong support line, both at the end of May and also at the beginning of June. I saw that it repeatedly bounced off the 21-day moving average, acting as a short-term support line. 130 yen is a very strong support line. That's how you should view it. So, can the stock price continue to stay above the 21-day moving average? It can be interpreted that the short-term upward momentum is effective. If the 21-day moving average is broken, the next support can be found at the 61-day moving average. That's how you should look at it. Currently, the 60-day moving average is positioned between $116 and $118. And Mamuri, I'll wrap it up. Eoje Myung-jun was confirmed in the S&P 500 list, and there was also a sector that benefited from it. So the reason why the semiconductor sector performed well like this was because there was a strong expectation for credit technology. Credit announced its earnings and then surged by 14.8%, completely boosting the atmosphere in the semiconductor sector. So today, let's take a look at the positive news that the rise in Cred Technology's stock price is just beginning. Cred Technology's stock price rose sharply after the earnings announcement. The company exceeded expectations in its fourth quarter earnings announcement, and the stock price rose significantly after the company raised its target price in January. Credo also provides high-speed connectivity solutions for data centers. They reported adjusted quarterly earnings per share of 35 cents, and sales were recorded at $17 million. But this was a strong performance, with NLS its consensus of 20 cents per share in net income and sales reaching $160 million. Now, especially for investors, there was also very positive guidance for the next quarter. First quarter sales guidance was raised from $185 million to $195 million. That's how they presented it. This figure is a significant increase from the previous consensus of $162 million. And as you can see, the main driving force behind this is the strong demand. As a result, the closing price of Credo rose 14.68% compared to the previous day, recording $71.85. This is the highest price since February 18th. Now, let's summarize Wall Street's reactions. According to FactSet's tally, after Credo announced its earnings like this, 9 analysts maintained their buy opinions on Credo, and among them, 8 gave a buy rating. They raised their target price. Now, there is a reason why Wall Street's reaction is so positive. It is because Credo's customer base is rapidly expanding. This is the decisive factor. Analysts say that Microsoft and xAI were the main customers last quarter, but they expect Amazon, which is already a key customer, to continue to be a major customer in the future as well. I'm not sure why you're curious. Credo Technology announced strong earnings 3 months ago, but its stock price declined despite the positive results. At that time, there was a message I delivered to all of you. Most of the selling is not by amateurs, but rather by sophisticated investors, which is actually a positive sign. This issue must be resolved for Credo Technology to receive proper valuation in the market. That's the message I delivered to many of you. In reality, now Microsoft and xAI have become major customers. If you look at it this way, you'll understand. A new analyst is coming out. Microsoft and xAI each accounted for 12% and 11% of sales in the last quarter, respectively, according to the report. Hanpyeon, Amazon accounted for 61% of sales in the last quarter. The fact that one company is responsible for 61% of total sales is quite surprising. However, even so, in the previous quarter, it was 86%. That means it was a company that had almost all of its sales coming from a single customer. The drop from 86% to 61% indicates the company is positively diversifying. It can be viewed this way. Well, that's not all. There's also Credo Technology. By 2026, they anticipate acquiring 2 more high-performance scalers as clients. That's the projection. So, Amazon is currently the number 1 company, and the second and third are Microsoft and xAI. In this way, they have secured 3 major customers. Now, by 2026, within the next 12 months, there is a high possibility that they will secure 2 more new hyperscalers as customers. This is how the management team made the announcement directly. Credo's chief executive officer stated that if the company acquires a substantial number of customers, Amazon's reliance on them will likely diminish considerably over time, mitigating the risk of depending on a single client. In the conference call, they said that their high-performance scaler is capable of accounting for 10% of sales in the long term. What exactly is a high-performance scaler? It refers to a data center that operates the cloud. If the data center's customer base continues to grow, eventually each customer will account for roughly 10% of the total. That's the meaning behind the statement about the growing customer base. Do you see the analyst's list of Needham? The target price was adjusted upward from $80 to $85. We maintained our buy opinion. According to his opinion, over the next 3 years, Credo will become one of the fastest growing sales growth stories in the semiconductor industry. That's how far we've come. Credo has recently continued to show strong growth, with sales growth more than doubling compared to the previous year, which is drawing attention. As a result, the stock price has also more than doubled over the past 12 months, and currently the stock is trading at 50 times the expected annual earnings per share. A price-to-earnings ratio of 50 is quite high, but because the company's growth prospects are so good, a price-to-earnings ratio of 50 can be justified. That's how you should look at it. Other analysts also believe that the stock has enough upside potential, viewing it favorably. This time, the analyst is Christopher Rowland from Susquehanna. Previously, Amazon's sales were stable, and the transition to high-margin diversification was very positive. He said this development was very encouraging, and the target price was significantly raised from the previous $60 to $90. Next is BJ Rack in the United States, who also raised the target price for analyst Alice from $70 to $81. They maintained an outperform rating. According to their opinion, credit card-based growth is the most important part. The ongoing advancements in digital new account processing, active electronic payment capabilities, and artificial intelligence adoption are also strengths. They said that artificial intelligence demand is the main driver of growth, and they made this analysis in their report. Even during the financial crisis, Craig Young's perseverance and patience endured. Giving up easily was not in his nature. Brandon, the chief executive officer, said that through partnerships, they are expanding their solutions to support high-performance artificial intelligence services for high-value customers even before the official launch. And this trend is expected to continue for the time being. This is how we will overcome adversity with a positive comment. Next is Hanmadi's secret. The unique strengths of the Korean wave, once the pride of K-pop, are now fully established as central to the global music scene. This is the most important news. Amazon's share, which used to account for 86% of total sales, has now dropped to 61%. The reason is that, as we mentioned in the article, Microsoft and xAI's sales contributions have grown rapidly, and the rest is even more negligible. Looking ahead, 2 more high-profile hyperscalers are expected to become customers by fiscal year 2026 within the next 12 months. This time, the performance was impressive, but the news was even more so. Personally, I judge it this way. The momentum of cloud technology is also strong. Among the 26 branches, none are showing a loss, 9 are breaking even, and the remaining 17 branches are showing strong sales, with solid results overall. The 1-year price chart of Credo clearly shows the visible trend line. Here is the resistance level. The resistance level is currently in the $80 to $85 range, and as you can see, it has been rejected several times in this area. So whether it will break through the resistance level this time or not is very important. And if it fails to break through, the price could fall back down again. Therefore, from here, we need to carefully watch whether it can rise again. If it breaks through this resistance level, the upward trend could strengthen. However, if it fails to break through and turns downward, a downward trend is possible. The dollars. 65 price range acted as support during the adjustment phase in February and March 2025. This support line continued the short-term upward trend. Looking at it this way helps understand it. And even if the price temporarily drops below $65, the 20-day moving average is at $60. As long as the price stays above $60 and rebounds, the upward trend will remain intact. That's how you should view it. But if it falls below $60 or even $59.2, the trend will have changed from a mid-term perspective. So it's correct to look at it objectively like this. The next news is about Bitcoin. Recently, there has been a series of good news related to Bitcoin. This time, the news we're introducing is also considered a strong positive development. So let's take a closer look at the details together. Triumph, the president of Triumphal Platform, has announced that a Bitcoin spot exchange-traded fund, which ordinary investors can use, is expected to be launched soon. The Truth Social Bitcoin Exchange Traded Fund is a spot exchange traded fund, and this exchange traded fund is designed so that investors can gain exposure to Bitcoin more simply without having to directly own the asset while still tracking the price of Bitcoin. It sounds a bit complicated, but in the end, it's an exchange traded fund that invests in Bitcoin. You can think of it that way. This is the product that was planned this time. It's not just Bitcoin, but also includes traditional assets and combined baskets of assets like Crypto.com coins, high-yield tokens, and Chronos. These products will be launched under the Triumph Media brand, and it is expected that investors around the world will be able to use them through major platforms and the Crypto.com app. The Bitcoin Exchange Traded Fund, launched in January 2024, provided investors with a legitimate basis for making decisions about investing in Bitcoin. It didn't even last half a year. After that, the total capital inflow into the market exceeded $130 billion. BlackRock's iShares Bitcoin Trust, called iShares Bitcoin Trust Exchange Traded Fund, manages about $69 billion in assets, making it the largest digital asset manager in the industry. Tim Draper leads Draper Associates, a venture capital firm investing in various regions, and also heads Draper Media and Draper University, a technology group. This company recently secured direct listing status related to the domestic stock market. Officially, it has also registered digital asset-related products and trademarks. Last week, Las Vegas announced a $2.5 billion Bitcoin holding plan, among other related actions. And if the exchange-traded fund succeeds this time as expected, it will be officially recorded as the largest Bitcoin fund linked to traditional financial institutions. And that's what the article says. Now, let me give you my personal and subjective judgment. President Trump is clearly showing his intention to raise the value of his assets by using Bitcoin. Now, last March, President Trump made a statement at a government event where the United States was installing a strategic Bitcoin mining facility, and last week, Trump's media said he announced that he would sell $25 million worth of stocks to buy Bitcoin. And recently, Trump's social platform submitted documents for the launch of a Bitcoin exchange-traded fund that ordinary investors can use. In Yondal, there are huge lakes connected like this. If you look at it this way, you can see it. Now, let's see what happens next. As regulations ease and supply grows, Bitcoin investment momentum may strengthen further. Continuously, the demand is increasing. Then, the investment risk is expected to relatively decrease. That's because the term is long and stable. Donald Trump's second term is expected to end on January 20th, 2029. So, as I see it, at least until 2028, Bitcoin investors are the most enthusiastic and the most well-supported investors in the world. So, investment risk has increased significantly. This is my personal assessment. I will continue to watch Bitcoin's momentum. Out of the 26 indicators, 8 are for buying, 9 are neutral, and 9 are for selling. They are evenly distributed, with many in the neutral category. Now, let's take a look at the one-year weekly chart. Bitcoin is currently at its all-time high, and its potential rebound is the main concern. If you look here, it broke through the resistance level twice, but it couldn't hold on and fell back down again. So the question is whether it will form a double top here and then rebound again. This part will be the most important. If it breaks through, check if trading volume supports it. It's crucial that it stays above the 21-day moving average. For instance, if it breaks out but then drops quickly from 10,500 to 10,600, which is near the 21-day moving average, it would be concerning if it falls directly below that level. Check if it is receiving systematic support. If the 20-day moving average breaks, the 60-day moving average at 96,000 and 98,000 acts as midterm support. That's the perspective to take. For Samsung CNT, if you observe high trading volume near the 106,110 resistance level and it reverses downward, be wary of a continued increase. That's what you should anticipate. If it gets stuck at this resistance level again, then it's a downward scenario. If that happens, expect adjustments down to the 96,000, 98,000 support line. Maintaining this support is crucial. If this support is broken, there could be a bigger downward adjustment. This is how you can analyze it technically. That's it. The content prepared for today is, as expected, about today's United States stock market outlook. In today's video, Kimson Group's earnings outlook and Lion Electric's data are coming out. According to this expert, the S&P 500 is expected to hit a new high this summer, and as it continues to reach all-time highs, the momentum will get even stronger. He is presenting this outlook. This expert directly confirms in this video what kind of factors are driving this bullish outlook. Today's broadcast ends here. Thank you to everyone who stayed with us until the end of today's broadcast. I'll be back tomorrow with another unique and useful broadcast that can help many of you with your investment activities. Let's all keep fighting together until the day we retire as United States stock investors. Have a happy day.
Thank you. After seeing the strongest month in several years, do you think the stock market will continue to rise, or is there some anxiety? The next guest is just as you said. This time our guest is Mr. Carson Group's Ryan Dietrich. Rocky Balboa is a symbol of the market, right, Moose?
Got it. I want to discuss how the S&P 500 performs the day after a significant decline. Yes, after a big drop, what happens next is what matters. Well, just looking at the numbers, sometimes it doesn't seem that intuitive. A 0.2% return rate may seem low, but it's actually a strong figure historically. The similar patterns appeared in 2003, 2009, and also in 2020. These were times when the market showed a strong tendency to recover right away the next day. This is just a simple statistic, but I think of it as a signal that shows how much the market is declining. I've already said this several times, but I keep saying that the bottom is near, and I'm saying it again in April. Right now, things are gradually getting better. The effect of the rate cut is real. That's right. Do you think it's going to go higher than we expected and reach a new high? Frankly, even from the current situation, it's not easy to say that we're heading for an all-time high. In reality, you should consider the global market too. You probably listened to several guests, but most countries are currently experiencing 52-week highs or even all-time highs. Even right now, In this moment, the United States market is showing a situation where it's following that trend. And there's another important indicator. The advanced decline line, which measures the ratio of stocks reaching new highs to new lows, shows that many stocks are rising in unison. This indicator is also reaching new highs recently. This is a strong signal that the current upward trend is not limited to just a few large cap stocks, but that the entire market is participating broadly. Another positive sign is the upward trend in the June S&P 500 futures. When the market rises strongly in May, statistically, June often shows good performance as well. Historically, summer is a favorable season for the market, and when May performs well, June and August tend to do even better. So this summer, it's possible that investor sentiment could reach its highest level ever.
I'm watching. No single risk factor stands out to me. Currently, there are no apparent risk factors related to the past that I'm particularly concerned about.
Is that so? Terry was immediately mentioned as the next in line. In fact, the fact that the results and evaluation are linked together can also be a risk factor. Although it may seem unwise to blindly trust the market's strength, and you may not want to, people say following the trend is risk-free. Terry always insists on caution and going against the trend, but that might not be the best approach.
It's possible. The Fed's previous issues have started to come up again. Musk is openly criticizing the current Securities and Exchange Commission regulations, and there doesn't seem to be any sign of a breakthrough. But even so, Lee Sung-gi looks uneasy. That's right.
And the risks that have been mentioned are already well known.
The pension fund assets we manage are predominantly international bonds, with a higher bond allocation compared to most other RIAs. Gold prices are stable while the dollar is neutral. I prefer momentum investing. But at the same time, I use a barbell strategy. On one side, I have momentum, and on the other side, I combine a contrarian style. That was the portfolio I had selected and maintained back in November last year. So are we exposed to the volatility of the stock market? Yes, that's how it is this year as well. It's not as aggressive as it was a year ago, but that doesn't mean the risk is gone. But recently, the biggest risk is that this strong market could continue, and many investors may not be able to keep up with it as much as they want.
That's the reality. That's right, risk is always present, and the risks we face now are also very real factors. Taxes are still an issue, and there's also the possibility of a flat 10% tax. The economy is still in a period of uncertainty, and interest rates are still high. The stock market has also rebounded strongly once. If you look at these points, it seems like a technical rebound for now.
It's necessary, especially in important parts. The bond market, which continues to be volatile, is still waiting for the Federal Reserve's interest rate cut this year. There are still analysts who are cautious, but looking at the data, they have raised the possibility that there may not be any interest rate cuts this year. If there are no rate cuts this year, both stock and bond markets could be shaken as expectations and reality collide. That possibility is definitely there, so I'm also keeping a close eye on that part. But at the same time, if you look, the S&P has performed well so far this year, and now it's in a situation where it's just received a correction. After recording a 70% increase over the past 2 years and a continuous 20% gain, the momentum in the first half hasn't been that strong. I didn't think this year's market would go up, but I judge that a 10 to 15% correction in the middle was a natural phenomenon. Despite market concerns about a real estate bubble 2 months ago, it has successfully rebounded. I still aim to keep the stock proportion relatively low in my globally diversified portfolio.
That's what we're doing.